Welcome back. Reporting season kicks off next week and investors are expecting flat results characterised by a falling dollar, weak growth among industries and falling commodity prices. So where should we be investing? Joining me in the studio is Jazz Kara of Boston Managers. Thanks for coming in, Jazz.
Thanks, Peter. Thanks for having me.
Now, I know you have views on all kinds of investment, but you also do run two funds. Just quickly explain the funds that you run.
So, Peter, our two funds are focused on, firstly, one on India, which is called Boson India Hedge. The second fund is on healthcare, global healthcare, which is called Boson Healthcare Insight. Two sectors, pretty much growth momentum sectors for us. We really like those two sectors. And really they've done reasonably well over the last 12 months.
Well, what countries do you straddle with your healthcare? Obviously with India, you do India, but across your healthcare?
Primarily the US, because for two main reasons. Many of the largest pharmaceutical companies in the world are American. Biotech, which is the other big element of healthcare investing for us, pretty much the center of innovation is really the US. Both from the number of companies, the availability of capital, and also, you know, the best researchers of the world eventually make it to the US to start companies.
Okay, and are there any Australian healthcare businesses in your portfolio?
Not in our portfolio, but you know, Australia is an interesting market too for healthcare. There's a global.
You wouldn't mind buying Ramsay when it was about $15, $20, would you?
No, well, for us, I think we look at, you know, companies which are very global in their approach. So our focus would be, you know, deep value investing in biotech. Look for really deep value sort of companies. In big pharma, it's mainly driven around event-driven strategies. You know, who's going to buy who, and that kind of drives the price, and obviously product pipelines, etc. So the Australian market is a bit more difficult for us because you know, the price movements are a bit more subdued, and the biotech sector in Australia is still in its infancy.
Okay, let's talk about the US healthcare sector. It's done really well. Is there still a lot of upside, do you think?
Look, first of all, you know, people ask me, for example, biotech, people ask me, is biotech in a bubble? Biotech is always in a bubble, right? So a couple of things have happened in the last 24 months, which are showing the effects, to some extent, of Obamacare. The increasing insurance coverage is driving a lot of pharmaceutical usage. So usage numbers are up. So from that perspective, you know, you would say that the US healthcare system will continue to grow. There's also a lot of M&A activity. At the moment, there's a lot of M&A activity in the health insurance sector. Our feeling is that you will also see that in the hospital sector. So I think healthcare sector, thanks to Obamacare, innovation, availability of capital, is going to be very robust in the long term. And of course, the aging population globally.
Okay. Do you think, you know, in the Western world, we're too China focused and we don't ever think about India?
Look, I don't think that. China is a very major player in the world economy, and I think we have to think about that. India, I think, is still a sort of a growth economy in many ways. It still hasn't kind of arrived on the world stage, whereas I could argue that China is a player on the world stage.
Of course, most definitely.
So I don't think we are ignoring India in many ways. The world is looking at India, but still an emerging market kind of scenario. China, well, obviously because of the stock prices moving up and down, the declining commodity prices, I think China becomes pretty centric in Australian thinking.
But the Indian stock market looks a little bit more reliable than the Chinese stock market. Is that a fair call? Yeah,
I think India is not as dependent on retail investors. It has a lot of foreign institutional money, domestic institutional money, so it's a bit stabilizing in that sense. Also, the Indian market is smaller. Much smaller than China. I mean, an interesting statistic, if you look at the total decline of the Chinese stock market from the top till the fall in early July, that's actually more than the entire Indian stock market capitalization, right? But yes, it's not been as volatile because there is, you know, both domestic institutional money seems to come in when foreign institutional money leaves India. And so vice versa. And at the moment, I think to some extent, India may be actually benefiting from, you know, flows out of China. To some extent.
Well, is there a sovereign threat in the Indian market? Can the government throw a curveball at an investor like you that, you know, you might not have anticipated?
And a couple of things have happened. There was a whole, you know, alternative tax regime which suddenly got brought in, and there was talk of retrospective taxation for people who had invested in India 5 years ago. The government, I think, you have to remember, India is a democratic country. So the courts, the tax department are not controlled by Parliament. So the Parliament, the Finance Minister, the ruling government is very conscious to make India, you know, a very welcoming market for investors. Having said that, the courts and the tax office and various other public institutions, maybe not as much. So I think that balance is still emerging. So I think there's a risk, but not a major risk. I think the government is very aware that they have to make sure that, you know, foreign investors are welcome, their funds are welcome, and they are welcome to stay, and not being, you know, given all this uncertainty around tax and various other legislative issues. Yeah.
Jazz, what's your view on the Australian market? What do you think is going to happen over the next 12 months or so?
Look, I don't follow the Australian market as much as I should. I do worry about the Australian dollar. I think that doesn't look as strong as
But that doesn't help you. You'd rather be buying Indian stocks with a strong Australian dollar.
Look, it helps our fund. It helps, our funds are in US dollars, so it helps us to stand out from an Australian dollar investment perspective.
Yeah.
But I think the Australian economy is not as bad as people think. The consumption, domestic consumption is not as bad as people say. The property market is definitely helping. Mining has been the big problem, I guess. You know, maybe even that's bottoming out. You know, who knows? I think there's a steep decline in commodity prices. Yeah. At some stage, that's got to taper off.
Commodity prices are an important issue for India as well.
Absolutely.
What's your view on, say, iron ore?
Look, I think that's the ultimate problem, right? Demand going down, supply increasing, prices going down. I think from an Indian perspective, the biggest boon to India has been the oil price decline, because India is a huge importer of oil, and that makes every finance minister in every state in India look very smart at the moment, right? Yeah. Because the budgets are looking great.
And it's good for profits for companies that use oil.
Absolutely, and also for the consumer. Even though I think the government has smartly kept most of the value and not let it pass on to. Look, funny that, yeah. But you know, from an iron ore perspective, I think India is not as dependent on iron ore as China was, and to a large extent, you have to compare India to like what China was in the 80s or early 90s. So 10 years down the track, if the growth momentum in India continues at 8 to 10% every year, then, you know, of course, every commodity will, to some extent, be looking at, every commodity exporter would look at India very, very closely. But I think it's early days for that yet. I think that's going to happen in the next 5 to 10 years.
Last question, your global economic outlook. What do you think is happening there?
I think we are not in a bad place. I mean, the US is looking very good. Certain emerging markets are looking very nice. Yeah. I mean, China always has its problems of, you know, growth numbers not being as good as people thought, etc. But it's still growing, you know. Worst case, growing at 5%. Still, an economy that size growing at 5% is pretty good. Sure. Of course, there are risks, but you know, I think it's a benign place at the moment, with some risks with the Fed, etc. But I think next year we'll be putting all this behind us and moving forward.
Yeah. So, given all the problems with Greece and China and whatever, your suspicion is that 2016 will be a reasonable place to be invested in the stock market?
Absolutely, absolutely. I think I believe that very strongly, yes.
Okay, mate. Great to see you. Thanks for coming on the show.
Thank you very much, Peter.
Always good to see you.